In the past 3 decades, the attitude of central banks towards gold has shifted significantly, as previously, central banks sold their gold reserves as a means of diversifying their assets and generating funds for government initiatives or debt repayment. However, the trend has shifted and central banks are now showing a preference for purchasing more gold than they are selling. The change in behavior regarding gold reserves among central banks can be attributed to various factors, including the need to reduce reliance on the US dollar, mitigate the impact of inflation and geopolitical instability, uphold trust in the global monetary system, promote local mining industries, and bolster the value of national currencies. The World Gold Council has been tracking central bank demand for over 30 years, and their data shows that emerging economies have been the largest buyers of gold since 2010, while European nations were the largest sellers of gold between 1999 and 2021. A report from the World Gold Council stated that the global gold purchases in 2022 reached a record high, due to economic uncertainty and inflation fears. Gold demand rose 13% year-on-year to 4,858 tons, the highest level since 2015. Investments in gold bars and coins accounted for 60% of total purchases, while central banks and institutional investors also bought significant amounts of gold. However, the report notes that a significant amount of gold purchases, nearly 65%, in 2022, were unreported. The World Gold Council attributes this demand to gold's role as a hedge against inflation and currency devaluation, as well as increasing economic and geopolitical risks. In 2022, Turkey, China, Egypt, Qatar, Iraq, India, UAE, Kyrgyzstan, Tajikistan, and Ecuador bought gold, with the fastest pace of purchases since 1967. However, 65% of these purchases were unreported, with analysts suggesting that countries like China and Russia may have made some of these unreported purchases as part of their efforts to diversify their reserves away from the US dollar. This renewed interest in gold by central banks is a stark contrast to the 1990s and early 2000s, when central banks were net sellers of gold, driven by a desire to diversify reserves away from gold and towards other assets. The World Gold Council has been providing valuable insights into how official attitudes towards gold have changed over time. Despite the fluctuations in central bank gold demand over the years, gold remains a valuable and well-sought asset, making it an attractive investment option for individuals, institutions, and governments alike. Central banks also buy gold to maintain confidence in the international monetary system, support their domestic mining industries, and as a form of diversification to reduce exposure to any single asset class or currency. Since 2010, emerging economies such as Russia, China, Turkey, India, and Kazakhstan have been the largest buyers of gold on an annual basis. These countries are likely stockpiling gold to hedge against financial and geopolitical risks affecting currencies, primarily the US dollar. According to available data, the top buyers of gold in 2022 were Turkey, 148 tons, China, 62 tons, and Egypt, 47 tons. European nations such as Switzerland, France, Netherlands, and the UK were the largest sellers of gold between 1999 and 2021 under the Central Bank Gold Agreement (CBGA) framework. The CBGA was established to limit the amount of gold that European central banks could sell in any given year, which helped to stabilize gold prices. The reasons for buying gold may vary, but one thing is clear: gold remains an important asset for central banks around the world. Its unique properties make it an attractive investment option, and its status as a symbol of wealth and power has made it an important tool for maintaining confidence in the international monetary system. The changes in central bank behavior around gold have had a significant impact on the price of gold and provide valuable insights into the factors driving central bank decision-making around gold reserves. Thanks for watching. Please like, share and subscribe our channel for more videos.